All right, well, welcome everyone. Just a quick introduction and then we're going to get right into it. My name is Tracy Schmidt. I am with Supreme Lending and I'm here with,
Burnett Crockett with Bay Area Dream Homes.
yeah, and we're so excited. This seminar is about taking the first steps to homeownership. Hopefully we answer a lot of the questions that you have about what's available and the mortgage process and what Vernette does as the real estate agent, what I do as the mortgage lender. And we're going to have a couple of polls throughout the seminar. So if you wanted to participate, we would love to hear what you have to say. And your results are private, right? So we're not going to know what your answers are. So we just wanted to really poll the audience and see what a lot of their questions and concerns might be about buying. And Vernette, do you want to go ahead and let everybody know what the agenda is for today? Let me go ahead and
Sure.
grab that here. Okay, there we go.
All right. So today, what we would like to cover is first, is now a good time to buy? We're going to also talk about the steps to purchasing a home, what's going on in the market, which is a really big deal. Everyone wants to know right now what's going on in the market. We're going to go over the pre-approval process and what to know. And then the most important thing, the first-time home buyer programs, the down payment assistance programs that are currently available. And we have some new ones that's coming up. And then we'll have a question and answer session. So if you have any questions, even throughout, you could just let us know if you have a question.
That's great. Okay, so what I'm going to do is launch the first poll to really get an understanding. What is your ideal home buying timeline? And Vernette, can you see the poll on the screen or?
Yes, it's number 3.
Okay, great. Yeah, so the third question, if you wanted to take a second and just fill in what your timeline is for yourself. Just closest to when you were thinking about um, possibly looking to buy. Okay, good. So we got a 3 to 6 months. And it's going to be different for everyone, and hopefully after this call, you're going to get really excited and your timeline might even move up. So that's the goal. So thank you so much for participating.
Okay.
So we are going
Awesome.
to continue on. And Vernette, I'm going to let you talk about, let's see. Okay. There we go. So who are
Well,
these happy people?
this could be you. These are first-time home buyers. And this particular couple I worked with for about a year and a half because they had to get their credit together. They had credit issues. Once they got their credit together, we found different down payment assistance programs. And I tell you, they're probably my number one clients who came in with the least amount of money ever. They came to closing with $850 after all
Ooh,
of their down payment assistance programs. Now, everyone is not going to be like that. There's different, programs for everyone, but that just goes to show with all the different programs that it is possible.
awesome. And I know we have a fun little video here that we're going to share with everybody. I'm going to press play for a second.
Mariah is opening the door for the first time in her new home. First time home buyers. Congratulations.
And Burnett, why don't you take that one too? These are all of your happy clients. The
Yes.
smile on her face was absolutely amazing.
Well, she is a first time home buyer, and she told me her goal was to purchase a home before the age of 30. So as she walks into this house, she's 29.7 years old.
Wow.
So she made it right before her 30th birthday. So she was super excited.
Her
Also
smile
with her,
says it all. It's amazing.
oh yeah. Also with her, I had to work with her for about
Oh,
a
sorry.
year.
Say it again.
No, I also worked with her for about a year we worked on credit, and then we worked on saving a little bit. She was another one. She came in with about $5,000.
Awesome. And
So
that's really what
very
it
well.
is, right? It's building the path to homeownership. And
Exactly.
if someone isn't ready right now, that's really what our goal is from this seminar, is to help you understand maybe some misconceptions that you might have, or how you can build that path to homeownership if it's something that you're not quite ready for. So all right, so last one, we have another family with happy faces that I think that is that their daughter looks happier
So
than they do.
yeah, it's the daughter and the parents put their resources together to purchase a home.
That's
So
awesome.
this was a really great, I enjoyed working with them because the biggest thing is the grandmother had to move in with them because she had fallen and broken a hip. So they needed a place with a downstairs or lower level bedroom for the grandmother. So we worked in, I think in about 2 months, we found the perfect place. They're happy. They are still renovating the backyard and all of that. Matter of fact, over the last weekend, she texted me and said they're almost done and they want me to come over to take a look. So another very
Awesome.
happy family.
I love that.
And they're all first-time home buyers.
I love that. Okay, perfect. So we wanted you to just have a chance. And if you don't already have our contact information, you can scan the QR code for each of us. So, and just to kind of go through the difference of what Vernette and I do in the home buying process. So, again, my name is Tracy Schmidt, and I'm the mortgage lender. So I'm the person that would talk to you about your application. I would review your credit. I would collect the documents necessary from you. Vernette, can you go ahead and let
Yeah,
them
yeah, I love
into the meeting? Okay, perfect. Collect documents from you, run the different loan program options to go over that and go over numbers with you. And there's Vernette's QR code as well. She also has her Instagram handle as a way to also communicate with her. And Vernette, do you want to talk just a little bit about
sure.
like what your role is in the process?
Yes, my role pretty much is to take you from the beginning to handing your keys. So you're actually purchasing a home. And again, as Tracy said before, this is a process, it's a path to home ownership. Most people don't walk in and I want to buy a house and in 30 days they're in a house. Usually there's a little bit of work that we have to do, which is okay. So what I do is from the beginning, we work with a lender, Tracy, to get pre-approved. Once you get the pre-approval, and Tracy may give you some items, action items that you have to do in order for her to get your pre-approval. We'll work with you. Both of us will work with you with that. Then after that, I identify what are your needs and what are your wants when it comes to the home buying process. So we always have a list of what we want, and then we have what do we actually need. And so we'll go through that. I'll take you out, we'll go look at property. I also take you through the whole escrow process. So once you are in escrow, there's a process. You have to do inspections. You have to make sure that you have your homeowner's insurance. So all of those things I will guide you, excuse me, and walk you through as well. All the way till closing day, and I hand you your keys. And then after that, of course, we will stay in touch because I love to go over and see what everyone does to their home after they've
Awesome.
moved in, because everyone makes changes at some point.
I
So
love it.
that's my role.
Perfect. Okay, so make sure you scan those QR codes, and that's going to give you access to our information. Hopefully, because you're on this call, you already have our information. But just in case, or if you wanted to share it with someone, go ahead and feel free to do that. So we're going to now talk about, is it, I need to, the PowerPoint is very tricky. Here we go. Okay. Is now a good time to buy? And a lot of people, I know I get this question all the time, Vernette. So just to go through a couple of the bullet points and why we think now is a great time to buy. And maybe I'll take a couple, Vernette, and then if you want to, well, you could take a couple as well. But so right now, because interest rates are a little bit higher, right, than what people might have been used to, there's less competition, right? There's less people in the market right now because everybody's waiting, right? We were waiting for rates to go down. We were waiting to see who the president was going to be. So there's waiting, waiting, waiting. Well, the good news for people that enter the market now is because we have some more inventory than what we've had in the past and we have less buyers in the market, it means there's less competition for you or for the people that are entering the market right now. We also are seeing a lot more opportunities for first-time home buyers. People are really working hard to get people into homes, and that includes us with, the down payment assistance program and some of the things that we're going to go over on this seminar. And then one of the other benefits to buyers right now are sellers are helping a lot more with closing costs. Now, when there was less inventory and more buyers in the market, it was a seller's market, meaning they really had the upper hand in the negotiation. And a lot of times when buyers were asking for credits towards closing costs, they weren't getting them because there was so much competition. And now sellers are a little bit more eager to give a closing cost credit. And that's something that Vernette would talk to you about and negotiate in the offer that you would make on a property that you're interested in. Do you want to take the others, Vernette?
Sure. I just wanted to jump in about that closing cost as well.
Mm-hmm.
When we are in a seller's market, we just won't ask for closing cost credit. What happens is everyone is submitting their highest and best offer the very first time because it's very competitive. So you don't ask for anything. Because as a listing agent, as soon as we see that, we're looking and we're like, nope, we're going to put it to the bottom of the pile because they're asking for things. And at that point, the seller is in control because he has 10 other offers to choose from where people are not asking things. So when people ask, is now a good time to buy? Yes, it is. There's less people in the marketplace, which makes it easier for buyers to get in, especially first-time home buyers.
Right.
So let's see, home prices are still appreciating just at a slower rate. So a lot of people say, I'm going to wait. Well, they want to wait for the next year to see what interest rates are going to be. Well, at that time, home prices are still appreciating, which means the prices are getting higher, a little bit higher. And maybe in 1 year, you may not be able to afford a property. So
Mm-hmm.
we always tell them now is always a good time. You can always refinance when rates come back down. So one thing that will never change is your purchase price. So if you purchase a property at 500,000, that's your purchase price until you pay off the property or you sell the property. Now, if you purchase a property at 500 at a 7% interest rate and the prices go down, you can refinance. You still have that 500,000 that you paid for it and you're paying less interest on it versus you're waiting and that $500,000 property is now $600,000 and you still have somewhat of a higher interest rate. So, and you can't refinance out of your purchase price. So that's why we always say, regardless what the rates are, you can refinance out later. Don't let that be the reason to stop you if you want to purchase a home. And then rents are at an all-time high. Everyone knows that rents are. I also do property management. Rents are definitely at an all-time high. I get calls every year of people that are being displaced because the owner wants to sell the property. And, if you're in your own property, you have that control. No one can kind of boot you out of there. You're in there.
Exactly. Okay, so this is just, an idea of the cost of waiting. Now, back in 1988, rent at $350, sign me up all day long, right? But it just goes to show, and this was only through Q3 of 2022, but rents from 300 to 1400, and we all know, I mean, if you're in the East County area, Contra Costa County, Alameda County, where Vernette's market is, obviously rents are much higher than what we're showing. This is just a graph to give you an idea of, just like home prices were 200,000 and now they're 800,000, same thing with rent. And so, the idea of rent is that it is going to keep climbing up. And so it's really getting you into a home where you're not paying someone else's mortgage. You're actually investing in the home yourself, where you're gaining equity as the home appreciates. And also as you pay your balance down, right? So as you're making your principal and interest payment every month, your balance gets lower. That increases the amount of asset that you have over time. Burnett, if you want to take this slide, this is kind of just an idea, right, of the different kind of counties that are near you.
Right. So we are in the Bay Area. So this shows Alameda County, Contra Costa County, Sacramento County, and then pretty much all of San Francisco Bay Area, which includes, Solano County as well.
Mhm.
So you can see here on the graph, in 2009, where home prices started. Let's take, for instance, Contra Costa County. And you could see the dark orange one, and we were right around maybe 300. And in 2023, we're all the way up to right a little bit over 800, probably around 850 right there. So this is just a little graph to show you how prices are continually increasing. When you purchase a home is an investment.
Mhm.
So, and I tell people, look at it as an investment. It's not a one-time thing. You're going to continue to earn equity in this property. So, yes, it may seem like, it's a lot right now. However, what is it going to be in 10 years? Or what is it going to be, when your children are graduating or, when you're ready to retire? Those are the things that you really want to look at.
Mhm. Okay, awesome. Okay, so our goal is to make your purchase a success, right? So having conviction that you want to buy a home, we definitely want you to weigh out the pros and the cons between buying and renting, right? There is going to be maintenance on the home that you're going to have to take care of if you own it versus, maybe calling your landlord. So definitely kind of weigh those pros and cons, again, paying yourself, right, and investing in yourself versus someone else's mortgage. That's definitely a pro. You want to plan to live in the area. It's saying for at least the next 5 years. I mean, and I don't know, Vernette, if you're seeing kind of an average. I think in your market, people really do buy and stay, right? Unless they're relocated with like a job or something. Oh, you're on mute, Vernette.
Sorry.
That's
Most
okay.
people are staying in their property. The young lady that I showed you at the beginning of the video, she already has $200,000 of equity in her home. So it just goes to show that, you stay there, again, it's an investment. If, you need to leave, I had a guy who they were in their house for a year and a half, and the wife got a job up in Oregon, and they had to sell. And they still had a lot of equity when they sold that property. So, it just depends.
Yeah, and there's gonna be, I mean, some upfront costs when you're purchasing a home. The closing costs, if they're not all covered, there could be some money again that comes out of your pocket. So, it'll take, a little bit of time. Luckily, in our markets, right, homes are appreciating, and you're gaining that equity a lot faster, being in California, but it'll take a little bit for you to recoup some of those costs. But it definitely, I believe the pros outweigh the cons. And so, but that's something that you're going to want to think about for yourself. Burnett, if you want to take this slide.
Okay. So you also want to know how much you can afford. So with that, you have to get pre-approved with a lender.
Mhm.
You're going to find a home with a monthly payment that you can afford. So that's really important. You may get pre-approved for, let's say, $700,000, but you're not comfortable with a monthly payment at $700,000. The last thing that Tracy or I want is for someone to call and say, hey, I'm losing my house because I can't make my monthly payment. So this is the conversation that we will have with you. What are you comfortable with? At what price point are you comfortable with? That is our biggest thing because
Mhm.
this is, again, a long-term investment. You have to be comfortable with that monthly payment.
Right. And what I always ask is when I'm talking to someone that's thinking about buying a home, that's one of my first questions is what is your total monthly payment comfort? And that's going to include your principal and interest, your property taxes, your homeowner's insurance, if there's an HOA, right? So I always will say like all in, meaning, what is that monthly mortgage payment expense all in for you? And what is your comfort level? So, if someone says, well, I'm paying $2,000 a month in rent right now. Okay, well, a $2,000 mortgage payment, it's going to be difficult, to get us to that payment on a higher price point. So what we would do is we would see what your ideal payment is, and then we would see how much money that you have for closing or what kind of assistance we can get you, and work backwards to what that sales price looks like, and go over that with you, because that gives a Vernette a good idea as the real estate agent to see in the area that you're looking in, your wants and needs of a home, is it feasible to get to that price point? And that's really the beginning part of our process together, is to get you comfortable with that payment, and make sure that we can qualify you, based on your income and what the affordability is.
Yes.
And I think, making your purchase a success, and I'll take this as knowing Vernette and how amazing of a real estate agent she is and how much experience she has. You're lucky to work with her because she knows your market really, really well. And she's a bulldog, right? She's a negotiator. She's someone that when, there's a house that you want, she will go to great lengths to develop a relationship with the agent on the other side of that property. And it's so important that you work, with a team that like, and trust. And so working with a realtor is really, really important. Sometimes people, you know, try to make Google or Zillow their realtor. Doesn't work, right? You're going to get misinformation. You're going to find properties that may not even still be active for sale. So you really want to lean on us. That's what we're here for, as part of your, home buying journey, to get the information and answer the questions that you have.
Well, one of the important things about working with a realtor, you want to work with someone that is active in the marketplace.
Mhm.
Because what happens is other realtors get to know you, and people, and I have it all the time, I will request disclosures if they're available. And
Mhm.
I'll get a text message, "Hey, Vernette, are you, do you have someone?" I'll say yes. And they was like, "Okay, just let me know." So it's kind of like you kind of have that extra, I guess the extra advantage going in if the other agent know that, that you're easy to work with and you're going to get the deal closed, then they are very happy to work with you again.
Absolutely. And, I don't know, in your market, Vernette, you probably know better than I do, but, with new builds and resales. So, this is something that you want to be aware of. If you think about buying a new build, or you're driving down the street and all of a sudden you see, them starting a new build and you're like, oh, this looks kind of cool. Don't go inside without Vernette, right? Don't visit a new build property without your representation of the real estate agent that you decide to work with, because, once you go into that location, you become their client. And so it's really, really important because, you may just want to jump in there and check it out and look at it, but it's just one of the rules of the builders, Vernette, right? Correct me if
Yes.
I'm wrong, where if
Yes,
you
no,
walk in
correct.
without your real estate agent, right, you're using their agent for that transaction.
And their agent does not have your best interest. They are employed by the builder. So they are to get as much money as they can from buyers. So that's why it is very important that you take your agent with you. Even the very first time, don't call and schedule an appointment without your agent. And
Exactly.
it's just to look out for your best interest.
Yeah, and a new build, is nice and shiny and new, right? That's what it is. But it really just depends, are you able to kind of navigate the delay of how long it could take to be built? Sometimes with new builds, and it doesn't happen as often, but are they FHA approved? Are they VA approved, right? Will the builder accept down payment assistance, in an offer? So, but it is something, again, even if it is a brand newly built house, that's something that Fernette and I could help you with, or if it's a resale, of an older property. So it doesn't matter what type of home you're thinking of buying. And a resale, Vernette, you want to take this one?
Yes, resale. So what you need to consider when purchasing a resale, how old the property is, when were the essentials lastly updated? So we're talking about the roof, major appliances, the furnace, the AC. Also, does the home have a home warranty plan? That's something that's really important because you can close and the day after you close, the AC goes out. Well, what do I do then?
Mhm.
What is the state? And those are the things that I will help you with. If they have disclosures, we'll go through the disclosures. If you see anything that stands out, we can talk about that and we can negotiate that as well in the offer.
Mhm.
What is the state of the home in the neighborhood? And this is something that is very important. Location, location, location.
Mhm.
You can buy the most rundown house in a great neighborhood, and that's a great investment versus buying the best house in a not so nice neighborhood. Because what happens is the location never changes. The neighborhood, sometimes neighborhoods can change, but you want to buy where other homes are being well maintained. Is this, a better zip code? Things like that. Those are the things that you want to think about when you're buying a home. Also, are you prepared for a fast escrow, a slow escrow, or other potentially unique seller requirements? And that's where I come in. If we are writing an offer, I will contact the listing agent and most will give me the information. But I'm just checking, what is the seller really looking for? Is it price? Is it a rent back? What is it that they're looking for to make this deal happen? And most of the time, I'd say about 95% of the time, agents will just divulge everything that the seller is looking for, which is great.
Awesome. And that's really like it goes to the next point, right? So after you work with Vernette and you know the area, the location, the type of home that you want, and then all of us, you're pre-approved. You don't want to go out shopping for a home unless you know what your payment is, how much money you're going to need. Do you qualify? Have we looked at your credit? Have we looked at your income documents? A lot of times people just they could go online or they could call someone, a financial institution and they just take some information over the phone or take some information online and spit out a letter. It doesn't really mean anything, to be honest. I mean, if they're not looking at your credit, your income, your assets, running automated underwriting, and actually issuing a letter themselves after all of those things are done, that's not a true pre-approval, right? That's just a piece of paper that you'll be excited about, and you'll go to Vernette and she'll show you the dream home that you want, and then all of a sudden you go back to that financial institution and they ask for your stuff and there's a deposit on your bank statement, that we can't use, or, you haven't been on your job long enough to use your overtime income. So it's really important that when you work with a lender and they ask for documentation up front, you give it to them so it helps make your offer stronger. And it's really also understanding what the seller wants, so like had Vernette said, she is going to be in direct communication with the seller's agent to figure out what the seller's looking for, right? It's kind of like you knew what the next slide was, Vernette, when you said that. And again, what are they really looking for, right? Maybe they just are looking for a cash offer. They need to get out of there super quick. They can't wait for financing. Maybe they don't want a quick escrow because they need to find another property that they're buying. And, so that's really what Vernette will kind of help figure out to ensure that your offer is strong. And Vernette, if you want to talk about this, making an aggressive or strong offer, what that means.
Yeah, so making an aggressive offer basically is we want to come in with our highest and best offer. And a lot of times, and I will ask Tracy when I'm writing an offer, and I want the buyer to see instead of offering 400, if you offer 420, which is what the market is dictating, Tracy, what would be the difference? And
Mhm.
Tracy will always email a breakdown. At this purchase price, this will be your monthly payment. At this purchase price, this will be your monthly payment. And Tracy, what is the numbers? I always forget for every 10,000 you go
I
up.
think it's I think it's $50 difference in payment approximately.
Right.
Mhm.
So are you willing to lose your dream home, the home that you really, really want, over maybe $50? And that's usually what it boils down to. So once people actually see the numbers, they realize it, okay, that's not a huge difference.
Mhm.
So we also want to make sure that our terms are good. We want to kind of limit our timelines for our inspections. We don't need 21 days for inspections. We can do inspections in 7 days. And I'll talk to Tracy. Hey, Tracy, can we get a loan contingency? How short of a time frame can I write that? Or even the appraisal. A lot of times the appraisal is out of our hands, and we all know that. If they're really, really busy, sometimes, we may need a little bit longer time, but listing agents and sellers, they all understand that because that is a third party completely out of our hands. So we definitely want to go in strong. What we don't want to do is say, well, let's just try it at this price and see what they say. And even in a market where there's not a ton of buyers that's out there, you'll still lose. Because what
Mhm.
happens is people will come in at the last minute and they'll submit an offer and they'll submit a stronger offer. So we always want to go in with our best offer, and you'll end up with much better results.
Yeah. And you mentioned the word contingency, right? And just
Yes.
to explain to all of you what that means. So when you write an offer, there's going to be specific things that you need to accomplish in certain timelines. And a contingency date is just the date that you promise to remove that contingency. Where, it's if it's 10 days loan contingency, that means that I've submitted your loan to underwriting and I'm going to know what the underwriter's going to need within 10 days of you accepting the offer, right? Or the seller accepting the offer. Same with appraisal contingency date. If that's for 10 days, then we need to order the appraisal, have it back, and then clear that within 10 days. So it's really important with whatever mortgage lender you work with to really pay attention to what they're asking for and getting the information to them as quickly as possible, because you don't want to miss one of those contingency dates. That's part of your contract. That's part of your written agreement between you and the seller. So we'll guide you on what those dates are. But it's definitely something to pay attention to because it's important in the transaction.
Yeah, my
Uh,
transaction coordinator will always email you and tell you the timelines that we have, how many days for appraisal contingency, our loan contingency. And those are the things, those are contractual dates that we have to meet. If not, then we are in default. And the seller can say, no more, sorry, walk away and move on to the next person. So it's very important that we have to meet those timelines.
Awesome. And then we're going to give you guys a little bit more information about who you're working with in just a second. I'm going to basically launch a new poll. Um, and I don't know if you could see that. And the question is, what is your biggest concern about savings for a down payment? Is it not knowing how much to save? Is it raising home prices? Is it understanding available down payment assistant options? So if you wanted to take a second and participate in this, again, your answers are anonymous. It's just giving us a good idea of how we can help educate people more, if we really know what concerns are, and hopefully you're sharing that with us as well as your realtor and lender. Okay, so we have, a not knowing how much to save, understanding available down payment assistance programs, which is great because we're going to go over some of that information here to come. So, okay, good. So the down payment assistance, that's great. So that's exactly, why we're on this call. So I want to go ahead and we're just going to take a second because you may all know Vernette really well, right? And I just wanted to take a sec, and Vernette will share, her experience with you. I just wanted to share, a little bit more about myself, and hopefully I'm the mortgage lender that you choose to work with. So I've been helping families realize their dream of homeownership, and building wealth through real estate for over 25 years. I'm familiar with the Bay Area market. I physically live and sit in San Diego, California. And so I moved to San Diego in 1999. I'm up in the Brentwood area of, Contra Costa County quite often. That's how I've developed a relationship with Vernette, and with her clients and some realtors out here in this market. I co-wrote a book, which if you haven't gotten a copy of that from me, you can absolutely request a copy of it. It's called Making Mortgages Easy. And it's just a really easy way to understand the mortgage process and the lending process. I wrote it with a real estate coach that I worked with. I hired her about 7 years ago. So you could scan the QR code if you wanted a copy. It's absolutely free. I'll ship it to you for free. And it's, again, a value to Vernet's clients, that I give. And then just who you're working with. I absolutely love figuring out a way to make a loan work. But sometimes I also have to be the bad guy, and the numbers are the numbers, right? And so I'm always going to be honest with you. I'm not going to lead you on. I'm going to tell you, this is, if you need your payment at this amount, this is the sales price that you can afford. And if that doesn't work for you, that's okay. It's just knowing, what you may need to do in order to get to that particular sales price that will work and where you're looking to buy. So I could be your best friend or your worst enemy. I always try to be your best friend. So you can't shoot the messenger. But again, I have access to really every type of loan program out there, except if you're looking to buy a mobile home. Vernet can still help you. But that's the only type of loan that we don't do at Supreme Lending. We're a direct mortgage lender. So that means I don't shop your loan around. I'm the only person that you work with. I have a team, Alina, that is my processor that you would talk to. She would help me gather some information that I would need from you. Sarah is my underwriter. I have my own closer and funder. So if Vernet's like, hey, Tracy, we need to close this in 12 days, can you do it? My answer will be yes, because I have a really strong team behind me, which means you have a strong team behind you. And you're always welcome to ask me any questions or reach out to me. And there's Vernette, again, you may know her already and all about her, but Vernette, I would love for you to take a minute and just talk about how long you've been helping families and, why you do what you do.
Well, in June, I will be 20 years of helping people buy and sell homes. This is something that I really love to do. The enjoyment really comes with first-time home buyers because what happens is a lot of people go from, I don't think I can purchase, to walking through the process with them, to them purchasing, and just the joy on that day when I hand them the keys. It just means so much more to me because they're very appreciative. And I've made a lot of great friends over the years, buying and selling. So, and I will tell you, I partner up with Tracy is because Tracy is going to figure it out. It doesn't matter what type of loan you need, she's going to figure it out. And, and I tell everyone, if you're patient, give Tracy a chance to figure it out. And she does. And if there's something like she said she can't do, she has a referral for you.
Mhm.
So that's one of the great things. I think, with the two of us, when we partner up, we haven't lost the deal yet.
Mhm.
So that's one of the great things that I love about working with Tracy. And I'm also here. I also have the your buyer's guide, and pretty much the buyer guide will go through from A to Z because we didn't go through everything. This is kind of like a general overview of what the home buying process is. I can send you the buyer's guide. You can scan. My QR code is on the front. We'll go back to that at the end. If you want one, scan it, or even just text or email me, and I'll send it to you.
Perfect. And we're going to leave room for questions if you're comfortable enough to ask a question, or you could put it in the chat. You're welcome to do that as we're talking as well. So if something pops in your mind and you don't want to forget it, jot it down, or you could throw that in the chat as well. Okay, so what we saw in 2023 versus today, and this is really, focusing on Contra Costa County housing market trends. And so in November of 2023, which wasn't that long ago, well, actually it was a little bit over a year ago. It's so
Yeah.
crazy. I can't believe we're in February of 2025. It's so crazy. So Contra Costa County home prices were up about 0.5% compared to the previous year, with a median price of 804,000. On average, homes in Contra Costa County sell after only 17 days being on the market compared to 25 days, right? So that's telling us that there is some more activity that's coming in on the market, and houses are still going very quickly. Do you want to add anything to that, Vernette?
No, no,
Okay.
you're right on. Yeah.
Okay. And then really people are asking us, what should we expect today? Um, and this is kind of a funny slide, Burnett, because it might just look like mumbo jumbo, right, to you on the call, but that's really what it is. I mean, when we talk about what interest rates are going to do, and Fed predictions and our interest rate's going to go up or down, I promise you, if I knew that answer, I would be a multimillionaire. And I would help all of you and tell you when is the best time, but we really don't know. And this is all of these different companies you could see were predicting on certain dates how much the Fed was going to reduce and make cuts in 2024. It's all over the place. I mean, JP Morgan Chase was at 125 basis points when Citigroup was at 100 and Wells Fargo was at 225 basis points. So this is really just to give an illustration of the fact that we have absolutely no idea. We just had a call with the president and owner of Supreme Lending Thursday. He was on our regional call and shared with us, I wish I had better news. But now they're talking about next year. And the reason why is because usually the market heats up, right? We're in, like, we had the holidays, which it's slower. First quarter, which is what we're in, it's generally slower. Burnett, the majority of business is done between what, April and September,
Yeah, it
right?
really starts around March, mid-March, all the way through, I'd say about August.
Yeah. And
Because
then
once
ideally,
kids, yeah,
yep,
people, kids start going back to school and all of that, things will
exactly.
slow down. And
And
then
that's, yeah.
surprisingly, it'll pop back up in October. So from October to mid-November, it gets pretty busy and then it slows for the holidays.
And it's funny because, we're saying August because people want to be settled in their new school districts,
Right.
right? By the time school starts. And then we say October because people want to be in their new homes before Thanksgiving, right? And then you have your December, Christmas, really the industry shuts down. I mean, it's crazy, right? And then you have like what we're in now, the first quarter, where Vernette's saying it really is starting in March, right? It's getting warmer out. People want to go outside. More houses are being held open. Sellers are now putting their houses on the market because they also know the slow times. And so strategically, they kind of wait until, March, which is coming up. Um, and so again, if you're waiting for interest rates to get back to where they were during COVID, that will never happen again unless there is another pandemic,
And we
which
don't
we do
want
not wish upon anyone, right? So the people that did get 2.5% or 3%, um, there's limited inventory because they're not selling that home, right? Because of how low of an interest rate they got. They're keeping it or they're renting it if they have to move. And so that's what happened is, our supply went down because for 2 years, everybody was gobbling up, these houses and locking it in at a very low interest rate. And they don't want to get rid of that low rate. Now, you know, there are people that didn't buy during that time or refinance during that time, that's good news for all of us. But they're predicting, the lowest that it'll probably get back down to, they're saying like 5.5%, right? Which still, in the grand scheme of things, and Vernette, I don't know if you remember, but because I've been doing this so long, I used to have to sell people 16% mortgages with 10 points. There was no RESPA, there was no high cost limits, there were no guidelines to it. 10 points is 10% of the loan amount you paid in a closing cost. Okay. Now on average, it's like a 1 point or 1%. So Vernette, do you remember that when rates were that high?
I do remember because I was going to ask you to mention what rates were before COVID.
Oh
Because
yeah.
now everyone thinks, rates are so high just because they're comparing it to COVID rates, which was just, that was not the norm.
It was
That
a
was just
yeah.
not the norm. So yeah.
Yeah, and that's exactly what it was. I mean, we were about where we are now. I mean, today, and again, it depends on your loan program, right? Because, when you're getting down payment assistance, you're getting assistance, right? And getting assistance also costs money, but they factor that in sometimes into the interest rate, or they factor that into what the cost of getting that program is, which some of your assistance is going to that cost, right?
Right.
So you may be thinking you're getting 5% assistance, but the program costs 2% or 2.5% to get. Well, then you're only getting 2.5% assistance, right? Which is great, because if your down payment is 3% and you're getting 2.5% in assistance, you're only coming up with a 0.5% down payment. And there is more assistance than that in some particular programs. Um, and we're going to talk about those in a second. But so rates are all over the place. That's why we say don't wait. If you can afford the payment, and you're comfortable with it now, the idea would be when rates do drop eventually, and even if they go down a 0.5%, the goal would be, if you qualify, to refinance and take advantage of a better rate and payment. So I don't know the answer to the rate question, but I do get it asked it every single day. Um, all right. So going forward, Burnett, do you want to kind of just, I mean, again, this is just really showing what we just talked about, right?
Yeah, again, this is just showing what's forecasted from 2024, forecast in 2025. Fannie Mae, forecasted 6.7%, in 2025, 6.2. And this chart is just a forecast. I know the California Association of Realtors have their forecast, and no one knows.
Yeah.
They're all just forecasts. So,
And
and
they're
I
all
will never,
different, which
yeah,
is
and
so
they're all
funny.
different.
Yeah.
And I will never tell anyone, you know what, get into your house in 6 months, you can refinance because the rates will go down. I will never tell you that. I will tell
Mm-mm.
you when they go down. They will go down. Historically, they've gone up, they go down, they go up, they go down. After 20 years, I've seen this happen.
Yeah.
What I can't tell you is when.
Hmm.
So it will happen. None of us can just tell you when, though.
Yeah, and I think too right now, if you're thinking about buying a house, watching the news is one of the worst things that
Oh
you
my
could do, to
goodness,
be
yes.
honest. Because people, I mean, I literally had someone calling me and saying, they were pre-approved, that they don't know if they want to buy because they think that the economy is crashing and everybody's going to lose their jobs, and they're in education and their funding for their school is going to go away. And I'm like, whoa, like, what did I miss? Because I don't know. Like, I don't watch the news purposely, because, you know, you can only control the things that are in your control.
Right.
Um, Whether you're renting or you own, all of this is still going to happen around you, right? So if you're paying 3 grand a month in rent, and you could get into a house for 3 grand a month, and you know that you're going to have that either payment because you need a place to live, right?
Mhm.
Then buying a home is still a really great investment for you, because it's appreciating. And people are scared because, well, what about what happened with the crash, when the crash happened? And that's a whole different scenario. Mortgage lending guidelines weren't as strict. We were doing stated income loans for people, where they would literally tell me, Tracy, I make 10 grand a month, and we would write that down, and that's what we use to qualify them. So bad on the industry for doing that, but between that, and then there being so much supply of homes, right? Too much of a supply where we couldn't keep up with the demand. You have those two things, which we don't have now. That's what caused the crash. And that's what caused people to foreclose, because they qualified for 500 grand saying that they make 10 grand a month, when really net income is 3 grand a month. And so they couldn't afford their payments. So I don't
Well,
want
not
you to
only that,
have,
the people, yeah, sorry, Tracy.
no, I was going to say, I just don't want you to have, to be fearful is smart in a way, but also you can't be controlled by fear, because we can't control what's going to happen. All we know, we've been doing this for 25 years, like, and we've helped people buy houses, right? And we've helped people earn a lot of wealth through real estate. And that's the mindset I think that you want to go into this with. Fernand, is that what you were going to say, or?
Well, I was gonna say also, we heard so much during the crash, everyone that's losing their houses, that's losing their houses. Well, the people that lost their houses were the people that didn't really qualify in the beginning for their home. Everyone else that owned a home, you and I, everyone else that have their home, they still have their home, and look at the values now.
Mhm.
So I tell people, don't think about that, because as you stated, guidelines are completely different. If you're able to hold on to your house, you're still going to have equity in your home. It's going to come back.
Awesome. All
Okay,
right, so now we're going to get into the fun part, the lending side of things. So we'll give you some information about like credit and things to avoid. Do you want to go through the slide, Burnett?
sure. So pre-qualification versus pre-approval versus conditional approval. So a lot of times, because there are online, there are a lot of people promoting, hey, we can get you pre-approved, we can get you pre-approved. It's not quite a pre-approval, it's a pre-qualification. So what it is an automated review of the unverified information. And again, it really considers your credit score. They don't look at anything else, just that. A pre-approval is a confirmation. Using most of the supporting documents are verified and reviewed by a loan officer. So that's, Tracy taking in all of your documents, reviewing it, looking, okay, yes. Well, a conditional approval is the most valuable because it makes your offer stronger. Because when I submit your offer, I can say, hey, this is a conditional approval. It has actually gone through underwriting and it has underwriting approval. So that means the whole loan file has been reviewed by an underwriter and the set of conditions have been issued for an approval.
Mm-hmm.
So that's what we want. And when you work with Tracy, that's what she will give you before we go out and start looking for our properties. We want
Mm-hmm.
that conditional approval. What we don't want is we get into escrow and before closing, and I'll tell you, I've seen this happen several times with other lenders, um, and something will pop up. I had one young lady and her old school debt, school loan popped up that she was in default on, and she was getting an FHA loan. So you can't get an FHA loan if you're already default with any other governmental loan. So that in itself was a deal breaker.
Mm-hmm.
If you do the conditional underwriter, everything has been reviewed. And once they give you that approval, we know that there's no issues. So as long as all of the other conditions have been met.
Mm-hmm.
So
And when you say and we're gonna kind of go through some of the things that you want to avoid after you apply for the mortgage. Because even though we get that conditional approval today, if you do something 5 days from now, you're voiding that conditional approval, right? Because the information has changed. So we're going to go through that in a second. So what's needed for a pre-approval, right? So this is what I'm going to ask you for as someone that wants to purchase a home. So you're going to need your pay stubs that cover the last 30 days. So if you get paid once a week, that would be 4 most recent pay stubs. If you get paid bi-monthly or bi-weekly, it would be your 2 most recent pay stubs. You're always going to want to have 2 years of W-2s. So now that 2024 W-2s have had to have been sent to you, you'll want to have your 2024 and your 2023 W-2s. If you've worked multiple jobs within the last 2 years, you're going to want to provide W-2s for any jobs that you've worked. Okay. Regardless if it was for a month, or 6 months. So any job within the last 2 years that you've been employed at. If you have rental properties now, or if you are a business owner, self-employed, have a partnership, a corporation, anything like that, you're going to need to provide tax returns as well. But if you're just a W-2 pay stub wage earner, we don't need your tax return. So that'll save you some documentation. Um, we're going to end up needing your 2 most recent months of bank statements or any account that you're going to use for the purchase. So, for example, if you plan on taking money from your 401k and you're going to put that into your bank account for closing, you'll have to provide proof of your 401k account and then proof of your bank account. And then I will tell you, hey, it's time for you to move that money, right? You want to avoid moving money around before talking to a lender because you have to source all of that money going back and forth between your accounts. A lot of people get excited and they tell their family that, hey, I'm working with Vernette and I'm going to buy a house. I'm so excited. And your family may say, hey, I want to help out, right? I'm going to give you $3,000 as a gift. You don't want to accept gifts from family members until you're in contract on a property, and your family member won't give you that money directly. They're going to actually wire it to the escrow company once you're in contract. So you really want to provide your statements as clean as possible. And tell your mortgage lender specifically what accounts you're going to use for closing, right? So if you have 10 different bank accounts, but you're only going to use two for closing, then make sure you're providing those two that you're going to use. And we generally don't need you to document more than what's necessary. And so, I'll let you know that when we have a conversation. If you do own other properties already, you'll also want to provide the mortgage statement for that property and proof of insurance if it's not including that. So that's really all that we ask for. So it could be W-2s, pay stubs, asset statements. That's it. Once I get that information, I'll review your credit, which we're going to talk about next. A couple of things to be aware of. If you get any type of bonus, commission, or overtime, you have to have been receiving that type of income over the last 2 years. So it's really important that on an application, if you put in overtime or you put in bonus or commission, that you're talking to your mortgage lender and letting them know how long you've been receiving it. And if you've been at your job for less than 2 years, you have to share your prior employer information with your lender because they'll have to verify that you got overtime, commission, or bonus income at the previous job as well. So just make sure you're as complete as possible in the application process with your mortgage lender, because that really helps us see the full picture and know all the documentation to ask you for. And again, jot down your questions, right? Because at the end, if you have questions on any of these specifically, you can ask. Brunette, you want to take the next slide?
Sure. So credit, this is the thing that we were talking about. You have to check and monitor your credit and fix any problems before you start looking at a house. So I will tell you this. First, it's going to start with Tracy. So allow Tracy to pull your credit.
Mhm.
Once your credit is pulled, she can tell you what you need to do to fix any problems. There can be certain things. If you pay this off, if you pay that off, this can change your credit score. And then Tracy will do, is it the rapid rescore that you usually do?
Yeah,
Once,
so we first do like a what if simulator that's going to tell you how many potential points your score could increase if you need to increase it, right? We only want to do that if it's necessary to qualify you overall. And then if you follow those particular things and you give proof of those things being done, then we order what's called a rapid rescore. Yep. You're on mute, Vernette.
okay. So typically you need a 580 credit score to qualify for FHA or VA loan. 620 for conventional. Most down payment assistance program is around 640.
Mhm.
And that varies because every program requires, a different credit score, but right around there, you should be good.
Mhm.
And again, if you need to increase it or not in order to qualify for the program, Tracy will walk through that with you in order to make
Exactly.
sure that you get the most that you can out of these programs.
Absolutely. Okay, so let me go to the next slide here. Okay, and we talked about this a little bit, right? So things to avoid after applying for a mortgage. So you do your application, you provide your documents, I review credit, I work up numbers for you, I let you know you're pre-approved, I let Vernette know. So you want to be consistent with your information after that letter is issued. So if there's any change to your income, to your job, if you get offered a different position, even with the same company, you're going to want to talk to your mortgage lender. Okay. Make sure there's no change in your assets or your credit. We only pull credit once and it's good for 4 months. Okay. But 10 days before loan closing, we do a soft credit pull. Every lender does this to ensure that no new debts have been opened. Or let's say you had a credit card with a $5,000 limit and a zero balance when I looked at your credit, right? Zero balance, zero payment. But you got excited because we're closing and you wanted to buy new furniture. And then all of a sudden you charged $3,000 on that card and now have a payment of $100 a month in your debt ratio. That could change your qualification because the underwriter now knows that you have an extra $100 that we have to factor into your expenses. Okay. So don't do anything until I say, congratulations, your loan is funded. I tell you that you never have to check with me again on when you spend money. right? You never have to disclose to me what you have in your bank account or not make a deposit. You're free of me. But for that time period that we're working together, you don't want to change jobs, you don't want to open or use new credit, um, and you don't want to change anything with your assets. Now, I have had people in the transaction that have called me frantic. Oh my God, Tracy, my car broke down. You told me not to do anything, but I need a new car. Okay. So what I'll do is ask you, okay, on the car that you're thinking about buying, what do you think the new payment might be? You're going to tell me $400 a month. I'm going to go into your loan and factor that payment in and make sure that we're still okay to move forward with that payment. So, you definitely want to just have those conversations with your mortgage lender. And it looks like we lost Vernette, so she's going to be jumping back on. But you definitely want to have those conversations with your mortgage lender if anything happens during the pre-approval. All right, where's Vernette? Sometimes Zoom kicks you out. So what I want to go over with you is what's in a mortgage payment, right? Because you may not know what it consists of. And so you're going to have all of these things included in your payment. We're going to have principal and interest. Principal is the amount of money that you borrowed, not including interest. You're going to have interest, which is the percentage charged for the use of the borrowed money. You're going to have property taxes. And what we'll do is once you find a home that you're interested in purchasing, I'm going to look up what the property taxes are on that home so I could factor it into your payment. You're going to have homeowners insurance. Hey, Vernette. Okay, good. Vernette's back. We lost her for a second. In your payment, you're going to have homeowners insurance. And depending on the product, okay, good. Vernette's back. Depending on the product,
Sorry,
we
I don't
might.
know if that was me or not.
Yeah, you were out of the meeting, but now you're back in, so we're good.
Okay.
I was just going over what's in a mortgage payment. So homeowners insurance, and potentially mortgage insurance that varies by product. So homeowners insurance right now in California is a really kind of touchy subject because of all of the wildfires and things that we've had. And so what I usually suggest to people is if you find a home you're interested in writing an offer on, if you have renter's insurance currently or car insurance currently, I always suggest that you call the person that you already have insurance with and say, hey, I might be buying a house at 123 Street. Would you mind working up a quote for me of what my homeowner's insurance might look like? Because as a lender, I can only use an estimate, right? I probably, on average, estimate about $150 a month for homeowners insurance. Now, you may be in an area and they may say to you, because it's a high fire area or because of this, that, or the other, your insurance payment's going to be $400 a month. I mean, whatever it ends up being, we take the actual premium and we divide that by 12. So whatever the insurance comes out to is what's going to be in your payment. Now, you don't want to find that out after you've already gotten into contract, right? So you kind of want to get an idea, and Vernette, could probably refer you to someone. I can refer you to someone in insurance if you need it that will work up a quote for you ahead of time. And then homeowners association dues, and otherwise known as HOA. So if you buy like a townhome or a condo, sometimes new builds or PUDs, like planned unit developments, they could have a monthly HOA. And that's something that Vernette will be able to tell you on each particular property because it varies. Vernette, anything you want to add to this?
No, that's everything.
Okay, perfect. So let's talk about down payment. So everybody thinks, and Vernette, you probably get this all the time, right? How much down payment do I need to buy a house? Most people think that they need 20%, but we know that's not true, right?
No,
You don't
no,
need
we don't need
20%.
20. And I think because that has been, people have heard this for so long, and most people think, well, I'll never be able to buy a house because I'll never be able to save 20%. And it's not 20% anymore. And this is what I tell everyone, especially with these down payment assistance programs,
Mhm.
if you can come in with something,
Mhm.
you can purchase a home.
Yeah. And honestly, if you don't put down 20% on a conventional loan, that really changes the guideline where then you have mortgage insurance.
Mhm.
On an FHA loan, regardless of the down payment, you're always going to have monthly mortgage insurance. On a VA loan, there's no monthly mortgage insurance. So that's one of the benefits to our, active service members and our veterans, our VA loans. So, if you are looking to purchase a home, there's programs there's still a down payment required for the loan program, but the assistance is what helps you cover that requirement. So as a first-time home buyer, you can put as little as 3% down to purchase a home. On a FHA loan, which is a government loan, the minimum is 3.5% down that you would need. Um, on a conventional loan that you're not getting assistance on, if you're a first-time home buyer, it's 3%. If you're not a first-time home buyer, it's 5%. So the definition of a first-time home buyer is someone that has not owned a home in the last 3 years. So if you owned a home 10 years ago, or 4 years ago, or 5 years ago, and you want to buy, you're still considered a first-time home buyer if you haven't owned a home in the last 3 years. So a lot of people don't know that. They think because it's the second home that they're buying in their lifetime, they're not a first-time home buyer, which isn't true. So I wanted to make sure that we talked about that. Okay. Cash to close. You want to talk about this, Burnett?
Sure. So saving up cash to close, you'll need enough cash to put away to cover most, if not all of the following. So down payment, and we're going to talk about that a little bit more, the
Mhm.
upfront escrows, prepaid interest, inspection and appraisals, the earnest money deposit, and closing cost. Now, this is what I tell everyone, um, with the inspection and the appraisal, those have to be paid at the time of service.
Mhm.
So when we are in escrow and we have a home inspection, a roof inspection, termite inspection, that has to be paid at that time. And the appraiser as well has to be paid at that time. When we go into escrow, your earnest money has to be available within 72 hours. In order, it has to be deposited with the title company or the escrow company within
Mhm.
72 hours. So if the earnest money is, and you and I will talk about it when we write the offer, if it's 2%, if it's 1%, whatever it is, that money has to be available immediately. Down payment has to be in, is it what, 72 hours, Tracy, before closing?
No, that's gonna be
Days.
your down payment is gonna be part of your total cash to close that you won't need until closing.
Okay, right. So right before closing, you have time for
Yep.
that. But the
Yeah.
other, those are, we're gonna need those funds immediately.
Yeah, and with the earnest money deposit, one thing you really want to know is remember when we talked about you providing me your bank account information that you're going to use, and you give me an account with Chase that has a balance of $5,000 in it, and your earnest money deposit is 3,000 as an example. um, you're going to need to make sure that you're going to send that earnest money deposit from the Chase account that I have, right? Because people have used their Wells Fargo account that I didn't have. Now, all of a sudden, I have to get your Wells Fargo account. And if there's deposits in there because you moved money from your Chase to your Wells, or you deposited money from your family, or you took money from your 401k, I didn't know about that. We have to trail all of that. Okay. So you just want to make sure that when you start with your lender and you give that documentation, it's staying consistent all the way through the process of what accounts you're going to use. Now, if you're getting assistance and you don't have $5,000 and but you need an earnest money deposit, right? The assistance doesn't help you until you're closing. So the earnest money deposit you need up front. Now, if you are going to get that from family, right? Because you don't have it yourself, then we have to do what's called gift funds. So your family could gift you that money. They sign a letter saying they're gifting it to you, and then they can wire your earnest money deposit to the escrow company on your behalf. But again, that's something that we need to know about as the mortgage lender, to get you that right information. On average, an appraisal costs about, I mean, I wish they were cheaper, but it's like around 600, 650. VA appraisers charge somewhere around 700. You don't usually you put it on a credit card, right? So that's not something that you need to have cash available on. But you would need to be able to put it on some type of credit card because anything that's a third party service, they require, payment from us when they do that service, which is what Vernette was talking about. Closing costs. So closing costs are going to be pretty standard, right? I always will give an estimate to you of what I think closing costs will be based on my experience, because all title and escrow companies are pretty much the same in their closing costs. What's going to change is the month you're buying the house, because we have to collect your property taxes, right? And when they're due in California is in April and November or December. So if you're closing in August, the amount we collect is going to be different than if you closed your loan in February. Okay, so that's going to adjust a little bit. I usually will tell people assume about 2% of the purchase price in closing costs. So if it's a $500,000 purchase price, assume about $10,000 in closing costs, okay, plus your down payment. But that's why we're going to talk to you about some assistance programs, because all of those closing costs are still going to exist. It's just figuring out who's going to pay for them, right? Are you going to pay for them? Is down payment assistance going to pay for them? Is the seller going to pay for them, right? If you ask for a credit, but they have to get paid somehow because they go to all third parties. Our only lender fees are processing, underwriting, funding. We don't collect any application fees up front. I don't collect your credit report fee up front. So those are just services that we do. Vernette spends her time, I spend my time in getting you pre-approved and working with you without making any money until that transaction closes. Okay. You don't pay us upfront out of your pocket. With Vernette, you will sign an agreement with her, about commission, and she'll go over that with you. For me as the mortgage lender, you don't pay me. My company pays me when the transaction closes. Okay, so it's just something to be aware of. Sometimes people think, they always ask me how much I charge, and I'm like, should I answer them? But no, just kidding. So I don't charge anything. And it's honestly true. Like, I've worked with people for a year, 2 years, and they still haven't purchased a home. So I haven't made any money, right? But I'm giving my time and my services to you because that's what we do in this business. So okay, we're going to talk about what you all came for, which is the down payment assistance stuff. Um, I don't want you to become a mortgage lender. I don't want you to read and memorize the guidelines, but I do want to just kind of give you a guide about some of the programs that are specific to California as a state. So it doesn't matter the city or county that you're buying in. There are going to be some specific programs to Contra Costa County, Alameda County, areas that, and Vernette will kind of talk about some programs she's done with people in the past. But this is going to be for California. So what I'll always do is I'll kind of weigh out all of what your options and see what bucket you fit into if you do need some kind of assistance. Now, don't forget what I said earlier, right? Assistance could come with a higher cost to the program, and it could come with a higher interest rate because you're getting assistance. So, if you have true money and you're just like, but I want free money, it's not free, right? So you just want to make sure that you're using it when you need it, because it could cost you more in the long run, or it may hold you up from refinancing down the road, right? Because when you get assistance, you're getting a first mortgage and a second mortgage, right? Well, if you go to refinance, that second mortgage has to be paid off. So you'd have to make sure that we have enough equity when we refinance to do that. And so, we'll talk about all of that. But so there's a program called Cal HFA, California Housing Finance Authority. They actually allow us to do a first mortgage, a second mortgage, and even a third mortgage. So you can get up to 3% or up to 6% in assistance that could go towards your down payment and your closing costs. Okay. If you get 6%, your rate's higher than if you get 3% assistance. If you get 6%, the cost of the program is 2%. So you're really netting 4% in assistance. Okay. If you get 3%, the cost is 2%. You're netting 1% in assistance. So again, this is state programs. We'll evaluate how much assistance you need. GSFA, so Golden State Finance Authority. I just closed one of these for a buyer. Down payment assistance. He went to his bank. I'm not going to say what bank. He was told he was pre-approved. He went into contract on a home. And I got a phone call 1 week before they were supposed to close saying that the underwriter didn't accept his letter of explanation as to why he's buying this home because he already owned a home. He was getting assistance from this bank. And of course, he and the real estate agent were freaking out because they've already passed all of their contingency dates. Um, so what I was able to do is take that letter of explanation, show it to my underwriter ahead of time, right? Before, and I would have done this anyway if I was the loan officer to start with. And the underwriter said, I'll accept that as long as we're not using any rental income for the house that he's leaving. Perfect. Okay. Now I know what the objection that he got from the bank I could overcome. Now it's a down payment assistance program with a first mortgage and a second mortgage. And he was getting an $8,000 credit from the seller. And they said, how quickly can you close? Right. And I'm like, oh, goodness gracious. So it puts me in a really tough spot because I want to say, by law, we need 8 days at least for RESPA, right? I'm like, give me 15 total days, which is really about 12 business days. And we did it. So they had to renegotiate with the seller. They had to get a little bit of an extension in their purchase. And we just funded his loan on Thursday. So we saved the day, right? We saved the deal. But again, that's why it's working with a lender and asking them, did you review all of my stuff? Did your underwriter look at it? Do you have automated underwriting? You're allowed to ask those questions because if those answers are no, then you really may not be pre-qualified or pre-approved or conditionally approved. And you might get into contract and Vernette, might be calling me because you used a different lender being like, Trey, I need you to save me. We don't want that to happen. Supreme Dream is something that's a Supreme Lending down payment assistance program. You don't have to be a first-time home buyer, and it goes down to a 620 credit score. Okay. So if you can't meet these other programs because they need a 640, we can look to do that. We also allow a higher debt to income ratio than a Cal HFA loan. There's no income limits, which a lot of these programs you can't make over a certain amount of income in order to qualify for the assistance. And our loan is forgiven after 5 years, where some loans you have to keep, right? And then you have to pay off when you sell or refinance. And then the Chenoa Fund. So again, we have 4 California programs that we can offer that are not specific to a city or a county. And then I know Vernette wanted us to talk about the program that was announced that I know Vernette did some training on. And it's a local county program that's coming out soon, which is really exciting. So it's open and exclusive. It will be to Contra Costa and Alameda County. It's called the Home Access Program. And this offers up to 40% of the home purchase price with maximum assistance of $200,000. It's a 30-year deferred loan with simple interest that accrues annually. So once it rolls out and I have all of the specific guidelines, right, I'll be able to share that. Vernette, from the training call that you did, is there anything that you want to add to, is it like, are they sharing in equity at all, or is it just money that they're giving for assistance?
No shared equity, which is excellent. And like you said, it's simple interest. And they hold, like a silent second. And again, you don't have to pay anything on it and you can pay it off early with no prepayment penalty or anything. If you want every year, say if the interest is $4,000 a year, you can pay that interest every year if you want to. So it sounds like an excellent program. They're going to roll it out the end of this month, the end of February. They're rolling it out, and up to 40% of the home.
Yeah. Now, did they say Vernette? And sometimes this happens because, it happened to me when I was trying to help people with that shared equity program that in the state of California they were doing, and the funds ran out, I think, in like 7 days, right? Did they mention anything about that, like how much in funds they have for this
They
particular program?
No, they didn't mention how much, but what they did suggest that if we have that buyers that are interested, that we need to get them registered.
Okay.
So, and then we can register now. And when the funds are available at the end of the month, then they can, they're earmarked for those funds.
Okay. And then so for us, we would want to make sure, and I know that if our program at Supreme Lending isn't, officially like rolled out when it is, and Vernette may know of another mortgage lender that she works with that can already offer this and you're, ready to go. I always want what's best for you. Right. And so until the program is released to us, and it's because every mortgage lender has different back end investors that we work with. So just because the county's offering it, we would need to make sure like that we could do our first mortgage, right, with our investors, and then we're okay to do the second mortgage behind it. Which we're one of the approved lenders that are going to be able to offer it. But once it rolls out, that's when I'll have all the specific guidelines. I did email the representative for you, Vernette, asking for the information specifically from the training, just so we have better guidance on credit score, debt ratio limits. I do know that it does have an income requirement, 80% of the area median income. And so for Contra Costa County, that's a maximum of $133,280 a year in income that someone can make in order to qualify for the assistance. So, and sometimes with down payment assistance, it's fitting in a box because you have an income limit, right? But then you also have a certain sales price, and then you have a certain payment, which is a certain debt to income ratio. So you have to meet the debt to income ratio to afford the payment, but you can't make over a certain amount, right? So there's all of these moving parts when it comes to assistance. That's really what our job is to get your whole picture, figure out how much money you actually have to invest, figuring out how much of a payment you can actually afford, making sure that there's homes in the market that you're looking in that you can get for that price based on your payment, right? And then once we nail that down, we can start looking at what programs might be available to get you some assistance. And
Also,
then,
I'm
yeah,
sorry,
so
Tracy.
we're
Also,
gonna, oh, go
with
ahead.
this program, the home access program,
Yep.
all adults in the house, they include the income. So if there's two adults in the house, then they have to include both the incomes. If you have maybe you're teenagers, 18, 19-year olds. If they have a job, they're going to ask for their income. So all of the combined income cannot exceed what the area median is,
Yep.
80% of that.
Yeah, and they'll always ask, like, they'll usually these programs ask for tax returns, so they're going to see if you're filing jointly married, right? They'll see what the total wages of the household are when you file your taxes, so it's not just your W-2. And so they figure out a way, right, to find out who's going to live there. Um, okay, I want to open it up for questions and answers. So if you feel comfortable enough unmuting yourself, you're welcome to do that. I don't see any questions in the chat, but you're more than welcome to also put a question in the chat, and then we could go ahead and try to answer them for you. If you're uncomfortable doing that and you want to just reach out to us after this meeting, you could do that as well. So just, we wanted to leave it open for you guys. So does anybody have any questions?
Did we answer your any questions about down payment assistance,
Oh, Gloria gave us a
qualification?
question.
Okay, go ahead.
Does the gift giving from families affect the income slash spending um by the gifting by them gifting it to you? I think okay, so no, a gift doesn't affect anything. It's only positive for you. So if you get gift funds, you would say to me, I'm going to be able to get a gift of $5,000 from my uncle. I would assume that that $5,000 would be used towards your cash that you need to close, right? Your closing costs or your earnest money deposit. What I do is I would prepare a gift letter that I would send to you, and we would need your uncle's bank statement of where the gift is coming from. And then you need like his phone number and his address. And he signs this letter that says, you're not going to need to pay back those funds. Okay. Now, and the reason why is because the underwriter doesn't want to assume that after we close, you're going to have to pay your uncle back $500 a month, right? Because that's going to affect your expenses. So it doesn't affect the income or the spending. Now, if you can get a larger gift that could help you buy more house, right? Because you could put more down, or you could afford maybe to buy down the interest rate to get a lower payment. But it doesn't affect your qualification. I hope that answered your question. That was a good question. Anybody else? Burnett, I was going to go back up to your QR code because you had
Okay.
mentioned earlier, because they could get a home buyer guide, right? They scan that.
Yes. Yes.
Perfect. Does anybody have any other questions?
Any questions even about the process, the home buying process, when to get started? Okay, well, did we answer your questions? All the questions? Thumbs up.
Wow, good. We're good at this. Well, awesome. I mean, I'm gonna stop sharing my screen really quick. And yeah, I mean, just let everybody know. Hopefully this was helpful. We recorded this session. So, if you have friends or family members or people maybe that weren't able to make it, but you feel like it's valuable for them to get this information, just reach out to Vernette. She'll have the recorded copy. You're welcome. Ava had said it
Awesome.
was very informative, so we
Oh,
appreciate that
thank you.
feedback. Yeah, and then we'll have it available. Burnett will send it out to all of you. So if you wanted to go back through it or look at any other slides in detail, you can go ahead and do that. If you think of questions, feel free to text them to us or email them. And then we hopefully look forward to getting you into your new house. Right,
Yes.
Burnett?
Yes. And don't be shy. Please reach out with any questions or anything that you need. You just have to take the first step. And then once you take the first step, you'll realize, the process is not that bad. And we'll continue to work with you and work with you to get you where you want to be.
Absolutely. Well, thank you
Well,
so much,
thank you
Burnett, for
again.
including me in this.
No, thank you, Tracy. Thank you, everyone, for showing up. Again, if you have any family or friends that you think could benefit or even thinking about purchasing a home, please let them know. Call us, especially when these new local programs roll out. A lot of times the money is not there long because so many people want it. And so you want to be one of the first people to register for these programs.
Perfect. Well, I'm going to stop the recording.